and I'm very glad to have you here today.
Yeah,
And I
it's
would
my
like
pleasure.
to, yeah, it's a big pleasure for me. You know, I just noticed interesting fact that the first time when we met, it was the 4th of December, and today is the 4th of June.
Yeah.
So it's exactly 6 months ago.
Yes. Many
And
many things have changed since then, right?
yeah, indeed, indeed. But our relationship became even stronger, you know,
Yes, it is true.
because we have such a great plans, and we have started such a great initiatives with you. So I hope that by the end of this year we will come with some real results together.
Yes, I hope so as well. Yes. Let's hope that things will improve in London so we can organize the school we have in mind, yeah? The week we have in mind.
Yes, definitely. So, Professor, I will. As far as I know, you have prepared the presentation.
Yes.
And then there is introduction parts into introducing you by yourself. So I will not take your time, but of course it would be a big pleasure for me to do it myself. But I think you can do it even better. I mean, introducing yourself. So the floor is yours, and then we will go on after your presentation with some Q&A session. And I think our participants will have a great chance to communicate with you directly.
I am very,
so thank
very
you once again for joining, and the floor is yours.
So thank you very much for inviting, Rustam. Yeah, it's an honor for me to be here with you. And hopefully sooner or later I will be coming there in person. Yeah, I'm really keen of coming to visit such a good, interesting place. And as you said, hopefully our collaboration will continue to many projects. Okay, today I have prepared a short presentation about COVID, or whether the COVID will lead to a banking crisis. It is a topic that cannot be escaped at this moment, in a sense. And let me say this in advance: it is difficult to decide whether to say about the answer now. To be honest, okay, it's going to be difficult. However, we can think together of what can happen in future. Okay, something about me first. I have a PhD in finance from York University, and a PhD economic growth from Naples in 2001. I also have an MSc economics. I work in the area of early warning system for banking crisis and financing constraints and firm performance. And I am studying market-driven securitization and studying bank competition, concentration, and systemic banking crisis, okay, which is my discussion today. I also have some strategies, and they have been reaching good journals up to now, like the Journal of Applied Econometrics in 2010, or the Oxford Bulletin of Economics and Statistics, the Global Strategy Journal in 2013. Then I moved more into finance. I published a paper into this area for the Journal of Banking and Finance, the Journal of Empirical Finance in 2016, and I have now a Journal of Business Ethics in this area, which is top 50 journal in the world. I am the director of the MSc Banking Finance at my school, at the King's College London, and I am also the CEO for the King's Investment Fund, okay, which is a fund that is there to help students to practice with their own, with some real money, to build their own portfolio and to learn how to apply what we study during the MSc, okay? So as we all know, the COVID has already had a big impact on many aspects of our lives and communities. I don't pretend to be able to tell all the point here. I mean, everything is ongoing. It's a bit difficult to discuss this issue. However, there has been already more than 20 million jobs lost in the UK, in the US, and 6 million jobs lost in the UK. So we have to recall that apart from finance, this COVID has an impact on our life, the way in which we talk to each other, okay? And crises are very costly to society. So for example, the ILO has calculated in 2013 that the crisis related for the crisis in 2007, it has led to 62 million jobs in 5 years. But the COVID has lost 1/3 of those, half of those in 3 months, to tell you the speed and the huge impact that the COVID had. So the question is, will the COVID lead to a new banking crisis event? This is what I am interested to discuss with you all today, okay? And I need to be honest from the very beginning, I don't have an answer for that, okay? However, I can tell you what type of research I'm doing and what type of this research you may want to do, okay, for yourself to have an answer for this, and then we will be talking together of something which is interesting. So what economists, what finance people usually use, we use early warning systems, okay, to forecast crisis. Early warning systems are statistical methods to try to use to infer, okay, whether there will be a banking crisis in future. These are also used for financial crisis, for monetary crisis. So early warning systems are mechanisms which are able to tell you, look, Leone, be careful, there will be one crisis coming next year, okay? This is the idea, okay? These policymakers are very interested in these techniques, at least after a crisis, okay? When the crisis arrives, then they say, okay, let's build some regulatory system and let's fix a reliable early warning and response system, okay? This was Strauss-Kahn, when he was the director of the IFM, he was telling that this is what we should be doing, okay? We should be having a new regulatory system and a reliable early warning system. So this is what they do. At least this is what they pretend they want to do after a crisis. So if anything now, it is time to take this tool seriously, right? Now the tools are there. So let's see how they work and how can we improve to use them today, okay? Because we want to check, I have prepared a simple exercise for us to understand how they work, okay? So before going into that, I want to go into some details of the financial crisis, okay? What I want to say is that it is interesting that the first very interesting point is that the crisis, the COVID crisis, if there is a financial crisis, is not originated into the banking sector. So this is very different from the global financial crisis. In a sense, that was an endogenous crisis. This is, in a sense, an exogenous event that may or may not arrive to the banks. Okay, I am reporting here the UK equity market from 2006 up to 2020. The end of the sample is February, or is half March, sorry. So why I'm reporting that? Because after the crisis, the UK market has been growing. Of course, it is difficult to estimate when it is going down and when it is going up. However, on average, has been growing after the crisis, and the crisis took something like this amount of years. So I would say 2 years to recover, okay? 2.5 years to recover. This is the peak that has been reached. Look how fast is the COVID instead, okay? In only 3 months, the global financial, the financial market went down by a lot with respect to the crisis. Is not yet, I don't know really, because this is up to half March, so I should update this data. However, it is not yet down as much as the global financial crisis in terms of level. I am reporting here all the data for the UK as compared us with the EU, the US, and Japan. Okay, so it is interesting to know from this data that the impact has been similar. So there's been a huge break here, a huge shock for the financial market, for the UK, a much stronger shock and faster shock for the financial market in the UK, and this is true for the EU, which take longer to recover. Okay, the EU market is less flexible than the UK market, and most likely this meant it took more time to recover, and this impact is bigger with respect to the UK. For the time being, the COVID has impacted the EU more than the UK. Most likely this is because, as everybody knows, this has begun in Italy, and then it has moved to France, and then moved to the UK. Maybe this is why this is the case. But however, something similar has happened to the US and in Japan as well, which take much longer to recover from financial crisis. Still, the speed is the same. Okay, to quantify the last different market I am going to present is about developed market, so what they call developed market, and emerging economies. Okay, so you see here the red line is for the emerging market, and the blue line is instead for the developed market. The emerging market is much more fluctuating than the developed economy, but still, look at here, the impact is very similar, and this is also interesting in a sense, and this is very different instead, and in my opinion, this is just an opinion, okay, this is because this is a proof that the COVID is not this is an evidence that the COVID is not into financial markets, okay, it's more from outside the financial market and is coming into financial market. Is it going into the banks as well? This is what we need to ask today, okay? To give you the different speed at which things has happened, I am reporting here the daily average change during the global financial crisis and during the COVID-19. So I am reporting here how far every day, how much the market has lost every day on average, okay? So in the US, during the global financial crisis, it has lost 0.15%, and it has lost 1.47%, okay, in one single day. And if you look at this is true for all the markets, okay? The impact is maybe is not as deep for the time being for the global financial crisis, but it is much faster, okay? It is a sort of a shock and awe event, okay? I am reporting here for the global financial crisis for some data. I am also reporting the Standard & Poor, the level, and the red is how much it has been lost. Okay, so for the global financial crisis, it has lost minus 19%. For the Standard & Poor, for the COVID-19, it has lost minus 34%. Okay, this is minus 42% in the FTSE 100, and this is minus 33%. Okay, so if we look and how deep the impact was, then it's not very different. So what was different really is the speed at which the event has impacted financial market. The last graph I am going to report is about risk. Okay, so I am reporting here the three graphs for the US, the UK, and the EU. And I'm showing that the volatility, this is a measure for volatility, I'm showing that volatility is much higher during the financial crisis, then it goes down. There has been some other events, okay? But then the COVID, again, much faster, has raised volatility at the same level as the global financial crisis, okay? So there is some evidence that something is similar to what has happened during the financial crisis, and something is different. For the time being, let's leave these graphs with the idea that the global financial crisis has been a long event. Hopefully the crisis will not. And second is that the COVID-19 has been much faster event than the global financial crisis, which takes longer to give all the effects. So how do we forecast banking crisis? Okay, so this has become a banking crisis. It has happened into the mortgage sector, and then it went to banks. This has happened from outside, okay, the global, the financial markets. Will this go into the banks? This is what we need to ask. Okay, so is the channel of transmission the same? Will this be different? Will it happen? Okay, we have to discuss all these details. What I can tell is, how do we forecast usually banking crisis? Okay, usually we forecast banking crisis by using a early warning system, EWS. I have prepared a very simple example for all of us to understand what an early warning system is, because those are things that are very interesting to discuss. So the first thing you need to define is what it is a banking crisis. A banking crisis is more difficult to define than what we believe. Because when you think to banking crisis, then suddenly people think to the global financial crisis. But that was a disaster. Sometimes we don't need such a big event to have a banking crisis. We can have a banking crisis if there is a closure, merging, or takeover by the public sector or one or more financial institution. So this is a banking crisis, okay? Or even if there is no runs, close, or merging, then we can look at start of similar strings of actions for other financial institutions. So it may be banks being taken by the government, but it may also be some other institutions, pension funds, for example, being taken from the government. In this case, we have something that is defined by a very famous book, which I suggest you to read if you didn't, that is called This Time is Different by Reinhard Rogoff, okay? So I'm going to present results for 68 economies from 1997 to 2015, okay? If we use these 68 economies, we have 43 banking crises, okay? Using this definition of an average that they do last about 5 years on average, okay? So when you have a banking crisis, then the banking crisis stays there for 5 years on average. Okay, let's have a look at the data. What we do, what economists, what banking people does when they want to use an early warning system, they use past observation of the crisis you observe, okay? So then you study some characteristics of the economies the year before. So, and this is what we are. Look, I am reporting some data. So the GDP per capita before the crisis, the year before the crisis, is 9.03, and it is the same in other years. So you can tell more or less if the variable is the same. The GDP growth is 3.88% the year before the crisis, and it is 3.60 after the crisis. This is also similar. But if you look at the foreign exchange depreciation, which is much lower, and if you look at inflation, which is higher, and if you look at the current account balance, which is much lower, and especially if you look at the credit growth, which is much lower, then you can tell that some variables are announcing the arrival of the crisis, okay? One number that is very important for us into this discussion is the probability of observing a crisis, okay? So the probability of, because we observe 43 crises, okay? And we have 43 plus 1, 2, 4, 9 observation. The probability of observing a crisis is 0.03%, okay? So this is the way in which, if someone asks, Leone, what is the probability of observing a crisis in this sample? Then I should answer, if I have no other information, 3.3%, okay? The problem now is that this is called unconditional probability. This is if I have to guess, okay? But now I want to use this variable to improve on this probability. This is what I want to do. I want to be able to tell the government, look, there will be a crisis because in these days, the probability of observing a crisis is higher than 0.03%. This is why we need this number. Okay, I will tell you now in a second. How do we do this? So we build up a variable, we build up a crisis variable, which is 1 if the crisis is observed and 0 device. So we have a lot of ones, 43 ones and a lot of zeros. And then we fit a very simple model. Simple model is the probability of observing a crisis as a function of logarithm per capita, GDP growth, depreciation, inflation, credit account balance. From this model, we calculate the expected probability, which is this. Okay, this model gives you one number for each economy at each period in time. If this number is higher than 0.33%, then we tell the government, be careful, a crisis is arriving. Okay, so how does it work in our example? I did the estimate to give you an example. Why, and especially, why do we use those variables? There are theoretical reasons to have those variables there. So logarithm of GDP and real GDP usually measure how rich is the people. So if the crisis arrives, we can use this money to tax, for example, and save people. Let's put it so. Okay, so the richer the economy, the less likely the banking crisis usually. Okay, the exchange rate depreciation means that a reduction in exchange rate tends to destabilize the banking sector, because if it drops too rapidly and then your banks are exposed to foreign exchange rate, they can go in crisis. Inflation is a problem because the higher the inflation, the more instability at macroeconomics. People does not invest if there is too much inflation. Credit growth. So if credit grows too much, then people may not be able to repay. So this is why it tends to destabilize. And again, foreign net position, which means that if the economy is not able to export, okay, their product, they can end up having a problem with the currency. This is why those variables are used. There are many others that are used, but for our example today, these are okay. I estimate a model. This is the model we estimate with the data I am presenting today. If there is no star, the variable is not important. So this means that the logarithm GDP per capita is not important. The GDP growth is not important, but we knew that because when we were looking at the data, we saw that they were similar before and after the crisis. Look at the depreciation in the foreign exchange, okay? Look at inflation. Being positive means the higher the inflation, okay, the lower the probability of observing a crisis. Then the current account balance is negative and the credit growth is again positive as expected. If credit grows too big, okay. Now, what do we do with this data now? Okay, this is the most interesting data, the most interesting table probably I will be presenting today. Okay, now we have the real crisis. The real crisis are 44. Okay, my model says the predicted crisis, okay, are 576. Look at this number, 32. 32 is the number of crises that my model is able to forecast. Okay, so it means that 32 over 44 is the percentage of corrected crisis. With this model, we are able to forecast 72% of the crisis. Is this a good number? This is difficult to say, okay? Because ideally we want to get them all crises, okay? We ideally would like to guess them all. But there is another problem here which you want to look at. Number here. This number is the number of crises that are not there. So there is no crisis. And you are telling the government that there is a crisis instead. This number is called a false alarm. Your model is suggesting there is a crisis, but the crisis is not there. Okay? those two are difficult to wait, okay? Because if we tell if we want to be on the safe side, we tell the government there is a crisis for sure, okay? This will hit 100% of the crisis, but we don't want to stay home forever, okay? So if we tell the government there will be a banking crisis if people goes out because of the COVID, then the government will tell us, stay home. But you understand, we cannot stay home forever, okay? So there is a balance here. If we want to hit more crisis, then we are over conservative. This is a problem that policymaker can't answer easily. I'm writing a paper on how to balance those two, okay? Okay, it is very difficult to tell the government, look, you can open, okay? Or it is also difficult to tell the government, stay closed forever, okay? You understand that this cannot be done, okay? I am sorry, I understand some people, there is a cost in terms of lives if we open. On the other hand, there is a cost in terms of lives if we keep it closed, because there is people that need support. For example, you want to know that the billings for rushing with a car in London has raised by 15 times. Okay, so people is nervous and if they are rushing with a car. Some people, they have some other health problems. They cannot be operated because they are at home in quarantine. Okay, so it is clear we want to keep into account that people can die, but we want to keep into account also that we can't stay home forever. This is a more technical way of telling the same. When you compare the two, when you compare this number with this number, in a sense, you are deciding when to open, okay? To avoid choosing which one of the two numbers you want to choose, there is a number now that is called the receiving operating curve. This gives how many times you guess that a crisis is arriving. This gives how many times you don't guess that the crisis is arriving. So the more this curve is this way, the better. Okay, the more the curve it moves to the left, the better. For our model, this area is 0.6961. I hope I didn't bore you too much. But now we have all the elements to think in terms of the COVID. Okay, we will be looking at many models, and I will be presenting the ROC curve. Okay, so after seeing how do we guess, okay, that the crisis is arriving, we want to ask how do we improve the forecasting of banking crisis. Okay, this is based on a series of papers I have. Two of them are already published. This is a working paper at the World Bank, and Calice and Leone, and this other paper here is under revision now. So how do we improve, okay, our methodology to guess crisis? The research is still ongoing, of course, okay? there are attempts to add a lot of variables to the model. But if you make, there is a problem here. If you make the model too specific to your data, so if you add a lot of variables, then the model is data specific. It will be good in fitting the data, but it will poor in forecasting new crises. Okay? There is an interesting paper, couple of interesting papers, that they are trying to use stock market based variables. So they look at the stock market, they say whether this will be becoming a banking crisis. The problem is that banking crises are different from financial crisis. You may or may not have financial crisis. This doesn't necessarily will be becoming a banking crisis. It depends on how resilient the banks are. It depends on the government intervention. So not necessarily financial crises are similar to banking crisis. Very often they go together, but not necessarily. So which area has been overlooked, in my opinion? First is the modeling of post-crisis observations. In my opinion, when you want to model the banking crisis is different from other from other crises because the banking crisis takes, it takes longer to recover. Okay, so the financial crisis can recover very rapidly. The banking crisis takes much longer. We saw 5 years on average. Okay, this is something that which we need to think more about. The second is the structure of the banking sector. So concentration. If the structure, this is something that financial market doesn't care, but it is important into the banking sector, isn't it? If you have few banks, okay, and those are big, they have some problems. If you have many banks, small banks, they have different problems. So concentration is something we need to have a look at as well in each single system, and this has been overlooked. Then something else we want to talk about is high frequency data, mixed frequency data. Usually people use yearly data. So foreign exchange for a year, inflation for a year, but the crisis doesn't arrive in a year. The crisis arrives in 1 month, maybe even less than that. And we can try to improve by using monthly data, for example. I don't have much to say here. One of my PhD students is doing research in this area. Having discussing that, then we can talk about the expected impact of the COVID-19 on the crisis and what we can do to make the banking system more resilient, which is what I'm gonna be talking in the next few slides. First of all, let's think about post-crisis observation. What is post-crisis observation? Imagine this is time, this is 1, which is the crisis, and it is 0 before. And it is 0 before. Then it takes 5 years to recover. Okay, so this is 5 years. What about those variables here? Someone treats them as non-crisis observation. They say, because I'm interested in the arrival of the crisis, I am not interested in the post-crisis, I put some zeros here, okay? Some other people, they drop it. They say, I drop it. However, if you do this, some potentially important information is lost, isn't it? Okay? Because economies in the post-crisis are different than economies at the beginning of the crisis, and they're different from the banking crisis, from the tranquil time. Look at here. I am dividing the years into, as usual, crisis periods, then tranquil times, and then post-crisis period now, okay? So we have another event. This was if we add those two, as I did before. Look here, the GDP per capita is higher during the crisis than in tranquil times. So usually a banking crisis arrives after some years of being rich, in a sense, okay? And look at the GDP growth. The GDP growth is a bit lower than tranquil times, but look at post-crisis years. It is a disaster. During post-crisis, the economy collapses. And we are not using this information to guess future crisis. Does it make sense? Look at the foreign exchange depreciation, 13.97. So post-crisis years are very different, both from tranquil times and both crisis period. So we want to model them, okay? How do we model it? Essentially, what we have done with the other model is that we modeled the probability of observing a crisis, and then we calculate the probability of not observing a crisis. This is what we have done. Now we need an augmented model, something like that. In blue, we have 3 events now: the probability of observing a crisis, the probability of not being in a crisis, and the probability of staying in the post-crisis. This set of equations is just to show you that if you consider this event, then you will have to change also those events, the probability of observing a crisis, because there is a new event now that needs to be taken into account. We call crisis duration bias is if the post-crisis is ignored. The second problem I want to discuss, which has been overlooked, is the concentration problem, is the structure of the banking system, okay? Look at this. If I add concentration to the model, this means that 62% of the banks, the three largest banks hold 62% of all the economy, okay? This is an important statistics. Look at the tranquil times is about more consolidated, and post-crisis is more consolidated as well. So when a crisis arrives, some banks, they die, and the concentration raises, okay? And this is true. Look at if we look at profitability, credit risk, so the diversification from banks, and also how easy it is to monitor them. Because the larger the bank, the more difficult to monitor them, because they are more diversified. So what I have done, this is the paper I submitted, and I want to show you some results, which is very interesting, is this. When concentration changes, the more concentrated the banking system, the more profitable, the less profitable, sorry, the banks, the less risky the banks, okay? The more diversified the banks, and the easier to monitor them, okay? So this means that they must help in deciding when the crisis is arriving or not. This variable must be considered, okay? And indeed, I have run, there is some theory. It is not clear from the theory whether it is best to have concentrated banks or dispersed banks. It's not clear. Someone says concentration stability is better because the bigger the bank, the more stable. And concentration fragility, sorry, should be fragility here. Sorry, guys, fragility here. Concentration fragility is the case because when banks are large, are difficult to save. This is called a too big to save discussion. So what I want to show you is I have added all those variables to our model, and I have estimated it again, okay? And look at what I found. I found that when concentration is low, 40%, okay, then the higher profitability, the lower the probability of observing a crisis. So when concentration is low, it is good to raise it. When concentration is very high, okay, credit risk is too high, diversification is too high, and large banks are not monitored. This means that when concentration is low, it is good to raise it. When concentration is too high, it is good to reduce it, okay, to make the system more resilient, okay? One last point here. I want to show that if you control, okay, with a multinomial model, if you control for the post-crisis events, then the number of correct crises raises to 82%, and especially the number of false alarms drops. So this means that the multinomial approach is the best approach that you should be using. Okay, I conclude now, okay? And maybe I'm taking too much time, I'm sorry for that, but I like this, you can tell I like what I'm doing, okay? So usually banking crises are driven by banking system illiquidity, inflation, and change in the credit, okay? The policy recommendation here is to prevent credit risk, okay? Currency mismatch, inflation, and high concentration. Why the crisis lasts this long is because of the real economy. It doesn't grow, okay? And we shouldn't be talking about inflation after the crisis, okay? And of course, we should be adjusting concentration during a crisis. What about the conclusion about the COVID-19 and the banking crisis? The first obvious conclusion from our discussion is that the early warning system needs to be fixed. Okay, so we need to have variables that are able to capture the impact of the COVID-19 on the crisis. It's not really clear which one to use. Maybe some market variables we want to add, maybe the volatility. This is what we should be doing. The second conclusion from our discussion is that the crisis is from outside the banking system, And so the regulation in place may be useless or not enough. This is a new event, and so new tools should be put in place by the governments. Okay, it has been a shock and awe event. Okay, so and initially it is a demand shock. People doesn't get that. It is a demand shock. So people couldn't work, so they couldn't go to buy things. So the demand has collapsed. So this was not a credit shock at the beginning. This was not a liquidity shock. Okay, and in my opinion, governments didn't react well. Okay, the only reaction that made a little bit of sense was from the, as far as I know, by the UK government giving the furlough policy. So the government is paying the salary of people being fired, telling the company, don't fire them. So people is still on the book of a company, but the government pays 80% of the salary. So this is the only, in my view, clever thing that has been done across Italy, the UK, the US, because this recognizes the speed of the COVID impact. Okay, so because now the EU, for example, is treating the COVID as the liquidity problem, and is not yet a liquidity problem, is this after thunder comes rain, or is this a self-fulfilling prophecy? So are they pushing for a crisis to arrive, given that they're misleading the government? Okay, they are doing the wrong things because they have in mind this is a liquidity shock. So this will happen to be most likely a liquidity shock. This is called a self-fulfilling prophecy, right? So in order to answer whether it will come to a crisis, we need to answer how much will impact the determinant of banking crisis. We need to monitor those variables, okay? So we need to monitor concentration, we need to monitor foreign exchange activities, we need to monitor inflation, and there is a problem here again. Again, it will be soon too big to fail or too big to save. Of course, now there is a lot of money that the governments are putting on the table, okay? Not sure, it's not really clear whether this amount of money is useful, because I don't see very clear ideas around, okay? It's like, okay, we got a lot of money, but it's not really clear what to do with those, right? There is a very strange debate in Italy about whether we should be using the MES, and the MES is related to the health system. Why not use it? Why not use it? Fix the health system. So it's like there is a lot of pie here, and people doesn't know how to use it. So I'm sorry for being this long, and hopefully I was not too boring, and I leave it for questions.
Thank you so much for your very meaningful presentation, because me personally enjoyed it a lot, and I hope that all the participants did. And before starting with the Q&A session with our participants, I was going to ask you a few questions. And the first would be the digitalization of the banking system. Do you think how would this digitalization would affect if these COVID-19 cases will arrive to our lives again in the future? What do you think about digital banking in general?
This is a very interesting question, to be honest, and again, it's not easy to answer, in the sense that from the digital point of view, even if it is hard to say, the COVID-19 has been a lucky event, in the sense that everybody has to change the way they do things, okay? If they do this, sooner or later, people will move to digital banking much faster than would have done without the COVID-19. On the other hand, there is a problem with old jobs in banks. So if people will be able to react to this technology shock, this is a technology shock, right? All of us has to be, had to be much faster in reacting to the event and to use digital banking much more than usually. So if people will be able to do that, eventually things will improve and jobs into digital banking will explode. So people will have a lot of requests for people being able in working into the area of digital banking. On the other hand, many people are already working into the area of banking. They are trying to reshape what they do. And so in my opinion, there will be a demand for new courses, okay? New education into this area. So there is an opportunity there. As in any crisis, there is an opportunity there. So this is my answer.
Thank you. And as the continuation of this question, as you quite aware, we were planning to launch a joint short executive course on digital banking and fintech leadership program by the end of this year. And could you briefly tell us about this project?
Yes, we have, let me go into the offer that we have so people will understand where it is located, okay? At the Banking and Finance Group, at the King's Business School, which I created with George Capetanius, we have 4 MSCs. So we have the MSc Banking and Finance, which is by far the most popular, the MSc Finance Asset Pricing, the MSc Finance Analytics, which relates to digital banking, and the Global Banking and Finance, which is an online program, okay? Then we also have opportunities for PhD and PhD Finance and PhD Economics and Finance. And then we have some new offer, which is the MSc Economics and Finance and Global Finance Analytics, which will be online. These are our major bulk of programs. Now we are thinking of offering short higher business educational program, short executive programs. So the project I have with you is one of those, okay? And for the time being, we are thinking to a name that is Banking and Finance Leadership Program, okay? And this will be for Uzbekistan, delegates. And for the time being, we are planning to have 1 week in London where people will be exposed to a crash course in something that I have been showing. So I will be teaching it, George will be teaching it, and Fotis Papailias will be teaching it. Okay, Fotis is the director for the Global Banking and Finance Online. So he has a lot of digital experience. So he will be very useful. I am more an econometrician, a statistician. And so I thought to a group of people that will take care of those delegates. And there will be also a couple of lecturers. One, she's an expert of regulation in financial markets. Another person is a specialist into tools in financial markets, new instruments in financial markets. And then I am also planning a quantitative finance summer school, which will be entirely online. This will start next week. However, for your delegates, in my opinion, it would be good to come in London to have a taste of what we do, because we also have a trading floor, and I have a Bloomberg expert that will help your delegates to have a fantastic experience when they come. So the people involved into the program for the time being, it is George, which is head of school, me, Fotis, and then I am contracting, okay, with Philippos and Alexia. You may have a look at their CV if you want. I have also invited some professional. Giles Punjing is top head CEO at HSBC. Patrick and Jesse, they teach financial derivatives, and David Norman is the person that most likely will be teaching some Bloomberg activities to your students.
Thank you so much for the valuable information. Now we have one hand raised, and we would like to give this person an opportunity to talk. Please, you're online.
Okay, I wonder how this will impact in the fintech banking. Okay, trading with valuta and gold up to the dollar. Thank you very much, Jan. Yeah, you are asking me whether you want to use your money into financial markets, right? It is difficult.
Yes, I will.
I want to show you some data that I have here. I didn't have much time to go through this because I realized I have put too many data into here. Maybe I will send you this presentation, Rustam. You can distribute it if you want, okay?
Yes.
That's really great.
Jan, please take into account that this data is up to half March. So if you want to decide, download the data again and do this analysis again. Okay. Look at here. I am putting gold here and for the global financial crisis and the COVID-19. So the impact on the gold for the time being is, at least from the data here, is much, as against to the dollar, is much lower, is much lower. However, notice that the level was lower in the global financial crisis. So in my opinion, people from the financial crisis, people went into gold. Okay, so there is, because of, how can I put this down? Because the gold usually is a refuge, isn't it? Yeah, so people moved from the crisis. Look at the height of this level here. Okay, it's much, almost double. This means that the gold has a higher quotation now, and this is why this 11% is a little bit smaller. So what I would do is I would estimate a probability model where the 1 is the probability that gold goes up, okay, and 0 is the probability that gold goes down, and then I would let the data to speak. I'm not really sure the impact about the fintech, because I'm not an expert of the fintech, I should say. Okay, so it is difficult to say. I would say again that also fintech will have a positive impact because of the crisis, because all those new tools, okay, are new, and those are good to trade from away. Okay, so it's a new way of trading. This is my expectation, is that fintech would be favorably compared to gold, for example. It is an expectation. I didn't do any estimate.
Thank you. There are more questions, but as far as I know, you have another meeting just in a few minutes.
No, I am free. I can stay.
Okay. Okay. Then there are questions that say, are there any plans by the Basel Committee in terms of tightening or mitigating capital adequacy requirements of banks during this tough period?
Well, thank you very much for this question, and this is exactly my point. They are sitting down, are sitting on tables, are discussing. Do you know how long will it take for the money to arrive? Imagine the European Recovery Fund is financed by the financial markets. Imagine they found this money bond. We will look at the money we will see the money not less than a year from now. Okay, because they have to find an agreement, then they have to decide which instrument to use, how to shape the instrument, how many guarantees, who is going to guarantee for this. Then they have to sell the bonds, and then they have to give the money to people. This will be, if we are fortunate, it will take 1 year from now. Okay, this is a point. The second point is that because they are not talking about capital adequacy now, and in my view, this is exactly the point I said. This is an old regulation. Okay, if the regulation is old, then it may not be useful for current crisis, if there will be a crisis. So in a sense, the reaction of our government, it is too slow with respect to the problem we have in front. Now there will be most likely another wave. We know this. At any pandemic, there has been a second wave. So now we are talking whether to open or not. We are talking of whether to use the MES or not. If I would be at the government, then I would be thinking of the second wave, how to deal with that, right? It is so obvious. But then they sit down at the tables, they talk for hours, and they come out from meetings with everybody. After meetings are happy because they have to share, they have to tell their voters, look what we got. But businessmen, they are not happy, man. If you talk to businessmen, they are scared because they know that they will have problems in distributing all big resources. So the answer is not. They are not talking of anything sensible for the time being in my opinion. What it is sensible, and sorry for being so straight, what it is sensible to discuss at this point is how to help people to pay for their food if there is another waves now, not in a year, okay? Now, we need to discuss this now, because it's very likely to happen. And also, sorry for taking this forward, we shouldn't be thinking only to people having the dependence, okay? So people that is working for someone else. We should also be thinking to people having a firm, people that is giving jobs to someone and they don't have a salary. How do we help these people? They can't sell anything. You know, they have not been able to sell anything, but they had cost because the production was still going, or maybe these things works in 6 months. So they pick some intermediate goods, they pay it later. Now these people have to pay for all these things. Have you ever heard the government talking about this? Okay, so I'm sorry to say we are in the hands of poor politicians, and in my view the problem is very okay. Let me put it so: if you elect a poor politician, Trump for example, okay, then, or Salvini in Italy, then you have a person that is not able, he should be doing 100 and it does 10, for example, it does 20. You don't see the 80 that is missing in normal times. So he should be doing 100, he only does 20. People that voted for him, they will say, oh, look at that, he did his 20. You don't see the 80 that is missing. During crisis, these people is able to do 0 or even problems. Now you see the problems of having an elected politician that is unable to do what they should. It is very clear to me. If I look at Italy, it is a mess. Of course it's a mess. It has been a mess for ages on everything. Now the COVID is something you can't escape. If you look at if you want my forecast of what is going to happen in the UK, it's going to be another mess because the Brexit is arriving. Okay, the Brexit is arriving and the COVID is there. Look at Trump. People is in the street, okay, trying to kill other people. How can they pretend they did a good job? I mean, how can they pretend? Or even in France, how can they pretend to be a good job? As usual, I have to say that the German government, without talking too much, they did what they should from the very beginning, without announcing to the world. They have stock of masks, they have stock of tests, and they did the test from the very beginning. So maybe the German government looks like a very good government, but we also have to say that they are very rich, aren't they? Yeah, maybe it is easy to do the right thing if you are so rich.
Thank you.
Is there any other question?
Yeah, there are more questions, and just for how many questions do you have time?
I can stay.
Okay, so Mr. Ahmed Malikov asks, what kind of alternative financial instruments can be used to overcome the challenges caused by the COVID-19? And would the use of ethical financials such as Islamic financial instruments, which are directly related to the real sector of the economy, be helpful in mitigating the damages caused by the pandemic?
This is Haidlin, if I read it, Alidin, if I read it well. Sorry for mispronouncing. Yeah. Okay. It is difficult here. I don't have a lot of experience of those type of tools. Of course, everything that relates people to their citizenship, like this type of tools, will be useful, in my opinion. For the Italian situation, what I have proposed, which sounds similar to what you say with a contract, okay? I was proposing something similar. People with a salary which is fixed by the government and by the companies should have reduced their salary to 80%, and with the money left, they should have given more money to people being at the head of the firm, without without any interest rate. So, for example, I have a salary. I would be happy to reduce my salary by 20% to give it to people that they can't work. Okay, and then this is, in my opinion, this should have been seen as a sort of a borrowing, but without interest. So once things are settled, they would have been giving me back the money. Okay. Of course, this is difficult because people believe that people at the corporation, they are too rich, or maybe they don't pay taxes. So there is a lot of problem with this intergenerational problem. Okay. But this is similar to what you say. I mean, for having something that I'm putting this down, then we should have had something linked to the citizenship, linked to the real economy, as you suggest. So I can't say yes to your question because I don't know well those tools. You understand that? But what I can tell is that if as you say, this type of tools links in the individual with a real responsibility, then this would be welcome. Thank you.
Okay, so Ahmedin, if you have any more questions, you're welcome.
Jan is opening another question. How about the 6 trillion printed by the Fed in the US? What will be the deal of the debt of dollar or not? Jan, you open very good question. To be honest, in my experience, when you print money, it always ends up in a disaster somewhere. Okay. Now the dollar, you know better than I do, is that the dollar is a reserve money, and so this is why they keep printing it. They should be careful because some other currencies can substitute the dollar. Okay, I'm imagining to the Chinese. The euro is in difficulties now because of the Brexit and the political tensions, and in the end, this COVID is a dramatic coordination failure. Okay, the COVID has shown into the EU and the US that there is a problem of coordination across governments and across different levels in the same governments. Okay, so for example, Schwarzenegger wants to do something and Trump wants to do something else. Boris Johnson wants to do something, Salvini wants to do something else. This creates a problem of coordination. And in my opinion, this problem of coordination may have a problem in the US given the conditions. They have lost too many money, too many jobs. They are not as rich as they believe because there is a lot of private debt there. And so I'm not sure, for sure the dollar will not be the reference currency. It is difficult to say when, but the COVID has accelerated this process, in my opinion.
Thank you. Ahmedin, you're online if you have any more comments.
Yeah, thank you very much. First of all, Professor Leonida, for your very interesting discussion and presentation. I would like to ask you about the policy responses which are now being taken by the developing countries like Uzbekistan. What kind of monetary and fiscal policy suggestions would you make? I mean, we are looking at the developed countries like the United States, and we can see that there has been quantitative easing, like, you know, expansionary monetary policy, since they also have the deflation problem. But when it comes to Uzbekistan, we've been currently actually suffering from high inflation, and I don't think the monetary policy, which is expansionary monetary policy, is quite effective to deal with the current situation. So should we actually adopt a mixture of both monetary and fiscal policies, or should we just go ahead with the fiscal policy, in your opinion?
Thank you very much. Of course, you understand. I don't have all the information to answer this about Uzbekistan, okay, and about the situation on how rich on average is people. For example, in Italy, we do have everyone has some money in the bank accounts. Okay, Italy has a lot of private wealth because there is a lot of public debt. So inflation in this situation is not bad. You understand that? Okay, public debt, the value of public debt reduces. So a bit of inflation helps in Italy. Right. Monetary policy is not very effective in this case because we are not into a banking crisis yet. Okay. So for the time being, the government should be using fiscal policy, and the fiscal policy should be based on maybe what I said. So people having the salary for sure, whatever for sure means, because you can be fired and the company can collapse. They should help in this case with a sort of a interclass borrowing. Okay. In my opinion, this will help, but it is a too courageous policy. Okay, you need to be able to tell people that being part of a community is more than making money on your own. Okay, this is the lesson of the COVID. We are not alone. Even if we are alone, you are in the middle of other people, and this is the sense of a community. You can do what you want. We have been lucky. We have been doing what we wanted for 20 years, really. But now we are in a situation where you can't. So you can't go out and buy what you want if people will not be able to put what you want into the supermarket. You understand that? So we are into a community. So people with a fixed salary, in this case, they should help families and people not having such opportunity. And this, because this is a movement of resources across individual, the government is free. And the government will have degrees of freedom to do other things.
Thank you.
Thanks for all these very challenging questions. Yeah, I can tell I'm not in front of standard students here.
Yes, yes. We have a question from Dr. Twaifur Rahman.
Yeah.
And I'm very glad to get a question from him, as he was also a speaker just a few weeks ago. Yeah, and he asked, given the scale and nature of the COVID-19 problem, we all imagine there will be a financial crisis which may lead to banking crisis since the businesses were closed for months. Considering the situation, what is your advice would be for the government, in particular for the emerging markets, to save the banks? And you see, this is the similar question that
Thank you very much. My point here is that I don't know what Uzbekistan is doing. For the EU and for the UK, the liquidity problem is not a problem yet. So what I fear is that they are making this as a problem. Okay, so because they see this as a problem, they will make this more likely to happen. So what I'm suggesting is that if we do something different than what we usually do, so for example, the type of interdebt that I said, then people will be less under stress and hopefully banks will suffer less. Because what you're suggesting, which you are right, you are telling, look, if people can't work, then many banks will be having non-performing loans, and the non-performing loans will be becoming a crisis. So my point is, let's work so that people doesn't need to use the bank account. Okay, so let's give resources now, soon, yesterday, not in a year. You understand that? I don't know the policy of the Uzbekistan government, but in my opinion, researcher from the Uzbekistan, they should be writing a document and they should be advising the government, because this is a citizenship. You want to do this for your colleague, for your citizen. Okay, you want to write a letter telling, look, be careful, this is not yet a liquidity crisis. Let's not put people under pressure, otherwise financial pressure. Otherwise, they will have to use all the money they have. And sooner or later, this will becoming non-performing loans. This will mean a banking crisis, which will 5 to 6, 7, 10 years.
Thank you. And do you have time for one more question?
Yes.
So Ulubek Kazakov, he expresses his gratitude for your time and for your excellent presentation. And his question is, what level do you think is the optimal level of concentration for the banks, and how can it be achieved?
Okay. Do you see my presentation? Is the presentation still on?
Now, let me. Yes.
Okay.
Yes, we can see your presentation.
I can finally answer the question properly. Thank you very much for this question. Okay. With my paper, I have estimated that if concentration is below 50%, or about 65%, then something can be done. So if the three largest banks, they have lower assets than 50%, then you should be raising concentration. If concentration is higher than 65%, then you should be reducing concentration. So this means that from the policy perspective, the three largest banks in the country should have between 50% and 65% of the total assets. So this is an optimal level of concentration, of course. You can still reduce it if you like competition. If you can still reducing by lowering credit risk, diversification, and make the bank easy to monitor. Okay, but I understand that this is quite vague. However, your question was precise. This is the interval in between 50% and 65%. You can check how much the banks in Uzbekistan they have, and you can come up with a policy recommendation here. This is why I like this paper. I hope the referee will like them as well.
Thank you so much. I think our participants got very valuable information for them, not only regarding the banking systems, but also the opportunity to study and at the King's College, and they know more about the master programs and the PhD opportunities. And could you just one short question regarding the scholarships? Are there any scholarships that the King's College can provide for those who would like to apply for the programs that you mentioned?
We do have scholarships. Usually those scholarships it depends. They may be small prizes, so £5,000, or they may be big scholarships like the entire tuition fees. This depends. There is a committee that I'm sitting. So if you have any appropriate student, an appropriate person that is willing to apply, tell this person to contact me via email, and I'll try to put this down. If the level of the student is good enough, I'll put this person down for the scholarship. Having said that, we have something like 2,000 applications, okay, for the banking and finance only. We have 2,000 applications from the world, and we only take 200 students, so 10%. So the competition is tough. However, if you don't compete, you never win. Okay.
Indeed. There are more questions by Mr. Jafar Utkurov and Mr. Yusupov, but I think you can send these questions through the email to us, and we will deliver the questions to Professor. And if there are more questions by our participants, you are welcome.
Please,
because we are here for that, to answer your questions and to share our opinion. So, and then I would like to express my sincere gratitude once again to you, dear Professor, and I hope that this is the first our interview, but not the last one. And we will meet again at both in person in Tashkent, because and in Uzbekistan, and that would be one wonderful opportunity for you to get better of our country and our wonderful and hospitality, and I really hope to meet you again in London and in other places of the world during the conferences. And thank you for your valuable insights and for your opinion. Thank you for being with us for 80 minutes of your time. Although I know that you have very tight schedule, but thank you once again.
I want to thank you for the invitation. It was a fantastic experience, and it has been interesting to prepare this presentation because it is not for academics, and I hope I was not too boring because of that. I'm an academic I'm boring. I am boring by definition. I'll see you soon, Rustam. Yeah. See you.
Thank you so much.
Bye
Thank
bye.
you. Have a nice day. Thank you.